Welcome to Insights. I'm Eric. Thanks for joining us today. I hope everyone's having a good day. We're going to talk about corn again. Not so much that we have an infatuation with it. It's just on the table right now, and that's how it goes. The evolution of the trade throws down certain trades and positions and says, hey, pay attention to us. And then we keep watching it. And I think more experienced followers of the matrix and the evolution of the trade discipline probably understand, but some people are coming in, and so we're going to talk about this more. The comments that were included above this video talk about how the grain market and corn in particular is a very dangerous situation. I've touched on this subject before. Corn is more than just a rally in price. It's more than a plaything for speculators. We do have a global food problem developing. It could get worse. It could be contained. If the weather turns out a little bit unexpected, we could have a situation that really roils society in a way that most people aren't even thinking about yet. So the real question is, how did we get here with corn? And this is where we're going to go through the evolution of the trade. I have a video that I produced before the weekend. It talks about the cycles and such. I want you to, we're not going to touch on these. Everybody who's a subscriber knows exactly what this stuff means. I suggest watching it again. And if you're not a subscriber, I think understanding what's going on in the daily column needs a further discussion. And you can see these numbers, but I think you're going to have to be a subscriber and watch that video to understand why the price is either going to fall from here or it's going to continue forward. But right now we're going to focus on corn and in the evolution of the trade and how the heck did we get here today in May of 2021. And it all started with a nibble way back down in here. Anyone who's been a long time subscriber knows that we talked about this massive energy build spike against a long protracted primary trend. Corn had been in primary trend decline for quite some time. In 2020, I had talked about corn was ready to flip. It just needed energy for the vast majority of the time. With the exception of right here, the energy builds were negative. They just weren't big enough. This was an attempt here, but it was too small. This was a massive energy build. It's a massive energy build that was against an opposing downtrend. This was an energy build that sent DI and DI2, which is they are measures that calculate or actually look at the distribution within the futures and options contracts across all players. It's a relative movement calculation. It's an adaptive calculation that looks at multiple time cycles, and it also is calculated in different ways. In this particular calculation, it's a multi-cycle calculation that looks at the best way to characterize it is whether or not everyone's standing on one side of the boat or evenly distributed. In this case, when everyone's standing here, we're all when we're up here and down here, we're all standing on one side of the boat. It means that whatever the prevailing trend, in this case, the prevailing trend was a primary trend decline, and it was, I think, a primary trend decline too, which means it had been down a long time. Primary trend decline is an aging primary trend. In this case, it's been down. So this large bullish energy build, one of the biggest on record, that popped up here in 2020, nobody paid attention to. I was screaming about it. I stuck my toe in the water to get myself in. Was enough to, I said, could flip the primary trend, and that's exactly what it did. Right about here, the primary trend turned higher. How do we know that? Well, the primary trend turned higher 7 months ago. It's been up 47% since then, but we know within the monthly trend right here that the primary trend turned higher on 11/1/20. So in late 2020 or in the fall of 2020, the primary trend flipped, and it did so because of this large energy build, of which then once the primary trend started to flip, the energy build started to dissipate. Then energy build got so strong that it fell below the -60 threshold, and really the way we measure energy is anything above 60 is a bullish energy build and anything below -60 is a bearish energy build. And the most important two measures of them, now DI is the moving calculation in the moment, and DI2 is the trend. A really strong energy build has a DI2 above 60, and the same for a bearish energy build will be down there as well. They don't always have to go above 60. Sometimes it really depends on the market. DI2 can move quite quickly in some markets, and it's a lot slower in others. The DI measures for the dollar index, for example, are much slower than they are for corn. But this downward spike, which brought us down to here in this bearish region, it's a bearish setup, it's a bearish energy build, generated a blocking dome right here. And that gave us an opportunity to generate a reset because the daily trend fell out of alignment. What does that mean? Well, that means that the daily trend here, which is the current mark, fell from up, down to down. And I said at that point in time, we're going to watch this one. This could be a reset. Now, when it did reset, the energy build ticked up a little bit from the low, and it provided just a little bit more energy, of which then that's fueling the continuation. And so where we stand today is right now what DI is around minus 45 and minus 43 on DI2, somewhere in there. That's these numbers right here. You can go and see them in the matrix right here. So actually the DI number is minus 45 and the DI2 is minus 48. That's off this bearish threshold. And again, you can watch, the subscribers can watch the video that's posted below this one. It's restricted content for further explanation and for better understanding. But we're off this low. If price continues to rally, we're going to probably see this dip back down, which will create another blocking dome, which will most likely create another reset opportunity at some point. I mean, we don't know that for sure, but that's usually how the cycles of energy. Cycles of energy move down, then they move up, and then they move down again. They don't always follow these patterns precisely to exact. You can see that they're pretty cyclical in terms of there's a period from the high and the low points of the trough. So there's a definite, you can measure the difference between these oscillation points, and it's a well-defined cycle, but there's slight variances within it. So right now, we are in the alignment and energy phase, which means that the market is not really reset. It's past the reset. We're actually now 22 days past the last reset, and we're going to wait that way. We're still following the primary trend, which is up, and in the flip occurred 7 months ago now, and we're following that, and we've probably escalated the position. Whether or not you want to profit take from this position, it depends on how energy behaves, whether this spikes really down a lot, and then it also depends on what these numbers mean here. Again, we're not going to go into that because there's restricted content video for subscribers, but this explains where corn is and how we got here. We got interested, we're following it up now, and this whole time we're following the primary trend. The primary trend takes a lot to knock itself out, so this could be a rally that lasts several more weeks, probably months, multiple months, could be even years. And you're going to stay with this until the primary trend gets old and enters a primary trend decline phase. That's an aging trend, which the computer recognizes. It measures all the impulses past the other ones that we've had in history. I've shown this before, and I'll quickly run up against. Here's the corns database for all the impulses. There's 32 bullish impulses. There's 32 bearish impulses from since 1959. They average 11 months on the bull side. They can go up as high as 31 months, which is well more than 2 years, people. So that's where I'm warning you. This could be a lot longer than you expect. The bearish counts average 12 months. They can go as long as 62 months, which is quite a bit. And really, here's the average counts. That's 13%. You can have an average bullish count of 23, 30, 200. If you're a subscriber, take a look at this stuff in detail. If you have any questions, let me know. It's all important. But essentially, we're waiting for a primary trend decline for aging, anything that shows extension, of which we want to take profits. Extension would come in the daily time frame right here, and we're following these cycles right here. I'm not going to talk about them, but that would be profit taking. Then you would load up some more on another reset if we get one. But ultimately, the exit is a primary trend decline or an aging trend, which means a trend that's too old, or the primary trend flips down. And right now, the primary trend isn't anywhere close to flipping down. So it's a game of patience and understanding the cycles of price, time, and as you can see down here, the cycles of energy. If you have any questions about what we talked about, how corn got to where it was today, it wasn't accidental. Anyone who's a long-term subscriber knows that corn has been playing itself through the evolution of the trade pretty specifically. It's a very good teaching market, just like Bitcoin is. Mostly these markets, and there's tons of them here. I just took them out so that I don't reveal all the data. But they're all following the evolution of the trade. Evolution of the trade uh, recognizes that each market has its own cycles, but it follows them pretty closely. And that's why it's a trading discipline. It's a trading discipline because it's universal across whichever market you're interested in. And there's quite a few of them here, from the bond market, the energy market, the forexes, agriculturals, grains. I believe this is precious metals, and these are some of the major stock indices. So if you're a subscriber, click to this link, click these help files, watch the video, watch every video, read everything you can on the evolution of the trade. You must become a master in understanding the trade discipline, because it will help you understand how, whether it's corn or any other market, moves through its different phases, how it follows these cycles, and it will allow you to develop patience and remove yourself from the equation any type of investing. Doesn't matter whether you're just a speculator, investor, or the producer, or someone who uses the commodities. You need to understand this stuff in order to make intelligent decisions and disciplined decisions and patient decisions. Patience is not something that you go and force upon yourself. That only comes with knowledge. And this is what the matrix provides us, and the evolution of the trade helps frame that information. It's a study of the price and time cycles and energy cycles. If you have any other questions, let me know. So that's basically where corn stands, and it's going to be an entertaining show, to say the least. It also is going to be a disturbing show, because the higher the price of corn and grains go, the more pressure that's going to fall on society. And I don't think anyone's having that conversation. They're not having the right conversations, but I think they'll be forced onto us at some point. So thanks for watching the video. Contact us if you need anything. If you like what you're seeing, subscribe to the YouTube channel that's below. Like the video or dislike the video, doesn't really matter to us. I would be thinking that the most important thing here is, if you're involved with any of these markets inside the matrix, is really, you get a glimpse of it here, you probably would benefit from subscribing to it. Yeah, I know that's a sales pitch, but it's really just what's going on. I mean, information is difficult to come by. It's not that easy to understand right off the bat, but you will learn it in time. Watch everything, master this, and watch every video that comes across, and you will slowly understand how cycles work through all markets. So thanks for watching, and enjoy the trading day.